Okay, who's excited after lunch to hear some panels about investing? So I'm Boaz Fackler. I work with Link Ventures as an investor. My claim to fame is that I get to speak to John Werner every so often. Who likes John Werner?
Who doesn't?
Who doesn't? Yeah. Yeah, and I'm really excited about this panel because we have this really amazing high caliber panelists, but also because I both invest, so any AI advancement can help me, and I'm always looking for some advancements. And B, because I'm investing in companies that are disrupting the investment industry. One of the latest is Samir's company, Farsight. So this is very exciting, to hear all your different perspectives. So why don't we start with some intros? Lauren, you can start.
Hi, everyone. My name is Lauren Clement. I lead up innovation and emerging technology work at Prudential. Nice to see you all today.
Hi, hear me okay? Perfect. Samir Datta, co-founder and CEO of Farsight AI. We automate and deliver proprietary AI agents that help streamline workflows across financial services and insurance. Prior to this, I was a private equity investor at a firm called General Atlantic.
Hi, I'm Lisa. I lead an AI technology center at Fidelity for about the last 5 years. Before that, I led the investing team at Betterment, one of the, original robo-advisors. And I'm really happy to be here today.
Good afternoon, my name is John Wu. I'm president of Ava Labs. Ava Labs is the team behind Avalanche, a layer 1 blockchain. And we actually help a lot of financial services firms, JP Morgan, KKR, Apollo, to name a few, create workflow that's more efficient on a blockchain. Prior to being an operator, I was an investor, just like everyone else on this panel. I was a tech investor at my own fund, at Kingdom Capital, and at Tiger.
Amazing. So let's start with pessimism. We'll go from risks of investments in the AI world to opportunities. So future of work. Are we afraid that AI is going to replace investors, some portion of workers, or is it somehow going to balance itself? Lauren, do you want to address this?
Well, I definitely wouldn't say that I'm afraid of it, but for sure it's going to change how we do a lot of things. And I think it's actually kind of an extension of the changes that have already happened a lot in the investment space, right? So for a long time, we've been using algorithms, we've been using technology to do the work with massive amounts of data, with real-time computations, with extremely high-speed trading. All of those things have continued to get better and better, and it's changed the profile of what you need to do in the investment space, right? I think we'll continue to see that. It'll hit different positions differently, but at the end of the day, if you're replacing someone who's making a decision on what to buy or sell with a program that was created by a human who's decided what the goals of that bot should be, there's still that person who's directing it, and at the end of the day, there's no right answer to investing, right? There's an angle to it about what will other people do, right? So if I'm right about what's going to happen, it's meaningless unless I know how the stock is going to move or how the investment is going to change, and that depends on other people. So I think it's going to be a little bit more subtle.
Okay, so you're not a strong believer in kind of like AGI, machines going to determine what the machines will decide to invest in?
Well, they can, but at the end of the day, who are they buying and selling from? If it's all machines, then who has the edge? And so it's going to, I think, will progress the same way we've seen with other technologies like extremely high speed algorithmic trading, where you'll see some odd behaviors at certain times. There'll be more breakthroughs, there'll be fewer breakthroughs, but I think it's not as simple as just computer versus human.
There, Lisa, do you want to address this question also?
yeah, I'm waiting for my little AI agent right here to help me with everything that I do. I think I'm embracing this this wave. Something definitely is different, right? Today, AI versus like even 2 years ago. I see AI now as just another kind of computer, and that should be really useful for what we do as investors, right? From like the entire value chain, So I'm totally embracing this wave of AI right now, and with no fear. I don't think it will replace humans. Humans always have a place. We create the AI, we destroy AI, and then we create it again with better AI. So I have more optimism.
Oh yeah,
than
I thought it's going to be
anything
a little
else.
bit more pessimistic. Lisa, I'll continue with you. Thinking about open innovation versus closed, we're seeing a lot of power concentrated with large organizations. Many of you are, work for large organizations. Should we be concerned? What are the benefits of open source versus closed? If we take like Microsoft versus Meta.
Yeah. I'm really thankful for Meta. Right? I'm all about open source. The more open, the better, because that's how we progress, right? As humanity, And I think there's still going to be differentiation, right? Because the models they're going to be commoditized. They're going to be open source, and when you put all the brain power of all of humanity in open source, it's going to win over any close source models. I think, but the differentiation comes from your own data, right? And firms, everybody has their own data. Firms have their own data. You as individuals have your own data, and the models apply to your own data. That's democratizing, and that's powerful. And then the second stage is really like, how do you represent your own data? There's IP there, and that's not going to be commoditized away so easily.
Fair enough. John, as a both investor, have probably a very interesting view on AI and in the crypto space. What is your take on open versus closed?
You're not going to ask a blockchain guy or a crypto person whether they believe in open innovation or not. I obviously am a big proponent of open innovation and the benefits of open innovation. I'm going to start by going back to your first question. I think AI is very important to the investment process and will change how you invest and will make it easier to do many, many things. That's been the evolution of technology, improving how people work. What I think open innovation in the hedge fund investing world or in the VC world may actually change business models in terms of how a fund is set up and how it works. There are companies out there trying to do this, and it's still very early stage. I don't know how many people know the company Numerai. And what Numerai is basically doing is it is trying to replicate quant-like returns that, generally speaking, were reserved for places that have so much scale that they can hire the 200 new, brightest, smartest PhD kids coming out of MIT, and they really had a monopoly over the talent. But if you can create a mechanism where all the people in the system are aligned, the users of the quant models, data scientists, data contributors, and people who are going to also fine-tune those models, then I can see a world where you're crowdsourcing data science and data analytics to the point where it benefits everyone. And as a user, the disruption is you actually who cannot get into Renaissance or Two Sigma because you're an individual or because you don't want to pay the 220 or 2 whatever they charge, you're actually able to get equivalent type models that you can work yourself in by using some sort of payment and some sort of functionality like a token or something, and get the benefits of that kind of quant type investing. So you have to believe that you can crowdsource thousands of people, maybe not full-time, but you're getting thousands of part-time data scientists, and data contributors will be as good or close to, or maybe even better than that small closed niche of 200 or 300 PhDs being monopolized by some big player.
Thank you. Let's move, on that note, let's move to a little bit more opportunities in investments with AI. As a venture capitalist, both investing and trying to support the portfolio companies to grow, one thing that we're struggling with a lot is how do we penetrate the legacy players as vendors? How do the portfolio companies sell to vendors? I think, Samir, that would be very interesting to hear your experience and.
Yeah. So I can speak to this a little bit from the perspective of someone who's a smaller company on the outside, and a little bit of how we found success working with legacy players that Prudential, Fidelity on the stage, and some other large players. I think it really comes down to this idea of crawl, walk, run. This is nothing new. Every time a new technology comes out, that's how enterprises think about adoption. And the real challenge is, both from the vendor perspective and then also from the perspective of the internal champion within the organization, it's your job to together figure out that roadmap that gets you from low risk, low opportunity use cases, but then have a very clear roadmap that iteratively adds layers of complexity, layers of risk, and ultimately unlocks that transformational value. And so one of the biggest things I'd say is, it sounds very easy, right? Crawl, walk, run. Where it becomes difficult is at each phase of crawling and walking and running, you need to align to three stakeholders, right? You have the business person who needs to see immediate business value and immediate ROI, even though you're not allowed to touch proprietary data just yet. Then secondly, you have the IT people who need everything to be auditable, traceable, high security compliance. And then lastly, you need to appease the vendor as well, right? It needs to be a project that's repeatable enough and scalable enough for it to be worth their time. And so what I found is two companies from the outside can look exactly the same, and the roadmap of crawl, walk, run that you come up with is totally different based on who the players are and who you're talking to internally.
It's very interesting. We'd love to hear now the other side of the equation, the perspective of Prudential, other legacy players. How do you see this?
Yeah, so I guess my first message to this group is we want to use the newest, latest, greatest technologies, AI, all of it. And so we want you to know that there's certain things that make that easier for us to do or harder for us to do. And Samir touched on a whole bunch of them. The more that you can tell us about the quality of the output of what we're getting from the tools, the easier it is for us to move ahead, right? So would I pick a tool that's right 90% of the time, but I have no way of judging the 10%, or a tool that's right 60% of the time, but it's really good at telling me, hey, this answer, this is a really good answer. I would always take that second one because I can work operationally around those other instances, right? Same thing with explainability, oversight, like building into the tool that what was it? Crawl,
walk,
then walk, then run. I'm getting ahead of myself. Yeah. If you can build that into the tool and give us a way to fine tune or say, hey, this is what's working, then we can start to take the human out of it faster. And it doesn't necessarily have to be like, a huge part of the products, but just thinking that way from the start, hey, what's gonna make someone like, Lauren or Lisa, like able to actually put this in the hands of people and start using it?
So what do you think is the role of proprietary data, for instance, in that aspect?
Yeah, so proprietary data, as we think about what do we build ourselves, what do we partner with people on, what do we buy off the shelf, data is a really important angle to that, right? So I think there's an understanding amongst most large companies that proprietary data is like gold in this new AI community. So you're going to be very sensitive to wanting to maintain that proprietary angle to anything you use. So I guess I would add that to my list as well. So it's kind of implied learnings from data, all of that stuff. You're going to need to be able to talk to that to people at large enterprises, especially highly regulated ones.
So I would love to move a little bit to talk about the products themselves. Lisa, maybe you can talk a little bit about your perspective on what is the winning value proposition. Is it just productivity? What Klarna just did with its call centers, reducing costs 40%, or are we more excited about valuable insights that create value?
I'm excited about both, but I think productivity is a no-brainer. Like that's the first thing that you're going to tackle, right? AI is a computer. Go use it, right? Go use it for good. Go use it for your tasks, for everything that you do in your entire workflow, right? In finance. So productivity, yeah, I think it's so much easier to build with AI now. Like I actually think we're underestimating how much productivity gain we can get. Sometimes people throw numbers like, we'll be 40% more productive. I actually think it's like multiples. Like it could be like 2x, 3x more productive. I don't know. Again, maybe too optimistic.
If we're going to talk about the investment field, your product is simply your returns. I don't really care if it's one guy with a great gut instinct or they have the most sophisticated generative AI model and have proprietary data sets. If their output is not high returns, I don't really care. So in this field, it is about returns. And I don't think generative AI can be equally used by different functions, different stages of investment, and different industry. For your job, early stage investing, you need to look that entrepreneur in the eye. Does he have that grit to do what is necessary to give your portfolio high returns? For public equity investing, even, there are fields like biotech or pharmaceuticals where it's very binary whether that drug is approved or not and effective or not. I don't think AI will help that. What AI will definitely help is improve your process, lower your cost probably. Somehow also the inference in all of this gives you some insight so you can actually make better investments. And that's the whole for most of investing.
So that's a great insight. And I think it's a great segue also to my next question about black box versus explainability. Do you only, would you or your LPs or your investors accept black box that generates returns without explaining it? Or you do need to find some explainability because it's very risky?
I mean, I lived through it. I started my career as a technology investor at one of the most well-known funds in the world. We were long, short, fundamental tech investors at Tiger. And that was all good until the quants came and they were able to replicate the returns. And there are actually very few fundamental discretionary long-short managers today, unless you've been grandfathered in with large asset bases, because money is still sticky. So it's going to change, but again, it's really just about returns. If there's a new methodology, a new gizmo that gives people better investments, endowments, pension funds, they'll migrate that there.
Samir, what is the feedback you're getting from from your customers?
Yeah.
Like black box and also productivity versus.
No, it's a great question. I've already learned in the last 5 minutes, so great thoughts here. I think the number one takeaway is that productivity to me is more a byproduct of having built a good product. So inherently, if you are delivering AI to people, investors, in the ways that they're already working, in PowerPoint, Excel, other systems that they might be using, that just means the productivity is letting you know that people are using it and you're making their lives easier. I think where the real differentiation of an AI product comes in is in the ability to consistently deliver those better returns. And that predominantly, a little different in the hedge fund world, but certainly in private equity, a lot of that know-how just comes from the senior people who have done pattern recognition. A lot of the information, frankly, is not written in a document somewhere that you can just feed into a RAG system. It lives up here. And to my knowledge, AI is not yet able to read people's minds. And so the real challenge that we've been faced with is how do we accurately get all the expertise that someone like John has into an AI system? And the answer is, it's the product UX, whereby you allow partner or analyst, doesn't matter, you allow them to prod the output of an AI using natural language and distilling their thoughts specifically to the AI.
Can you share an example? I don't know if something you can share from what you're doing. Is there like any example you can kind of give us for such a...
Yeah, for a great example is actually a private equity company we recently worked with. They're evaluating a tech market that has two main players, and they have a deal team staffed of 5 people on it. And nobody thought to look at, when they looked at Uber and Lyft and did a whole analysis on basically an identical market that was also a duopoly. And the AI integrated with their systems was able to surface a 5-page report with thorough analysis, going through retention curves and all these things Boaz, I'm sure, loves going through. That was not the AI was not asking the investors to say, hey, make a decision one way or another, but it surfaced these very valuable insights that none of those 5 people had even been at the firm when they made the Uber and Lyft decision.
Yeah. It's like having unlimited number of first-year analysts, but if you ask them to do the job of the more senior folks, like there's a lot you need to teach it how to do, right?
Exactly.
Yeah.
Okay, I think now we can move to a little bit more of a generic question. Like, what are the most significant changes? John, maybe you can address that in a pre versus post Gen AI investment world.
Samir and I were actually talking about this, and I think it was written up in either New York Times or Wall Street Journal. Literally, and I think Lauren just mentioned it, the function of the first-year analyst can be completely replicated now through AI. And I think that is one of the most startling changes, because most of these kids who go to Wall Street, either at a fund or in a banking, it's not just about learning and developing the tools and doing the grunt work. It's also ingesting in the culture of the leader, of the founder, of the bank, or whatever, and basically able to project that type of deal making or that type of investment strategy. So I think the biggest change is the functionality is going to be, low-level functionality will be taken out of the equation, but how do you actually train people who now are skipping that rung and teach them the culture and the style and the grit that you need to be a good investor?
I think that also partner level can be replaced very easily. Think about
Let's go straight to partner.
Higher ROI on that.
Lisa, what is your, you have to think about strategy. How do you think about the world before and after? What are strategies that you're implementing already to face that?
I think about this a lot, like pre and post Gen AI. Well, pre Gen AI, like I remember I spoke at this conference last year. I took an Uber ride home, and at the end of the ride, my Uber driver said, "Oh, I wish the ride was longer, because I want to talk more about ChatGPT." Right? Pre Gen AI, that couldn't have happened. So that was one big. There's just more excitement, I think. More imagination of what can be done. In terms of like concretely, pre-Gen AI, I think AI was really used as a prediction algo, right? I want to predict something with AI. And I think, adoption in finance tend to be low because of that reason, because it was just used for prediction. Sometimes the prediction is black box, so we can't use it. Sometimes it's wrong, so we can't use it, because the cost of error is very high, right? We're not in a creative field. We're not writing poetry for fun. We're investing to make returns, and we need precision. So that's pre-Gen AI. Post-Gen AI, like I said, I think Gen AI, post-Gen AI is just another computer, right? People throw like terms like semantic kernel. Well, that sounds like a computer, right? A kernel of a computer. Semantic, a computer I can talk to. So post-gen AI, I see AI is just a computer that you can talk to and always can talk to. You can talk to your data, you can ask your data many questions, you'll come back and then you can ask it again. You can look at different types of data. And through that iterative process of talking to your data and talking to your new AI computer, you're going to invest better and you're going to generate alpha and mitigate risk, all in one.
So I heard upstairs one of the panels gave like a wrapper question of give me, and I really liked it, so I'm going to adopt it. So 1 to 3 words from each of you about investments 10 years from now. Lauren, you can start.
Oh, you're going to stump me. You want to come back?
Okay.
I know there's a better word for this, but I'm thinking like all-knowing. All-knowing. Can I qualify it, or I just have to leave it at that?
You can qualify.
I can qualify it. I think the real differentiator in hedge funds, private equities, any sort of institutional investor is going to be the proprietary knowledge that they've built up over decades of investing. That's always been the differentiator, and that's not going to change with Gen AI. What will change is the number of people you need to execute on those visions and the efficiency at which you're able to draw knowledge from the past.
Okay, 3 words? Okay.
1 to 3.
1 to 3, okay.
Yeah,
I think open, like open data, like a way to aggregate all your data. Personalize, personalized investing for everybody. And the last word is democratizing. Democratizing returns for everybody.
I think in 10 years, there's going to be 2 types of investing firms. One is that closed source, and it's some company that has just got a bunch of proprietary data and proprietary models that give you extreme outsized returns, and it's very hard to replicate. And then the other world will be more of an open world, where data is easily transparent, the models and where they came from, the efficacy of the models are transparent, and then it will be more do-it-yourself, just like everything turns into. So the average individual will be able to contribute to this ecosystem somehow and also get access to these models and replicate hedge fund returns on their own.
I'll say information arms race.
You want to elaborate, or?
Just, I think we'll, to your point before about like, is it going to be computers versus people? I think it's going to be all of the above, and then how the dynamics play out. Hopefully we'll hit another balance.
Okay, thank you so much. On that note, we can move to the next demo. Thank you so much.